One of the world's most successful investors is undoubtedly Warren Buffett. He is also among the wealthiest persons on the planet. The total net worth of Warren Buffett is $77.3 billion. However, he continues to reside in the same house he paid just about $31,500 for in 1958. Warren Buffett maintains a modest lifestyle with his earnings and wealth. Welcome back, everyone. In today's video, we will be talking all about Warren Buffett. Remember to subscribe to the EM3 Financial Freedom YouTube channel for more personal finance and investing videos. Let's dive in. The balance of his money is for emergency protection. He leads a thrifty lifestyle, which allows him to invest more money and enjoy greater returns. His fortune will increase more quickly, and it is unlikely that he will become bankrupt. Consider this quote by him: "I'm not interested in cars, and my goal is not to make people envious. Don't confuse the cost of living with the standard of living." Buffett writes a letter to each of his firms every year, recognizing accomplishments from the previous year and outlining his goals for the current year instead of holding lengthy, pointless meetings. This gives him more time to work on more fruitful projects and his team more time to work and achieve goals. When Buffett was younger, he detested public speaking but understood that success required it. To overcome his phobia of public speaking, he participated in a public speaking school, which ultimately enabled him to become a successful public speaker. He now advises aspiring business owners that effective communication is the key to achievement. Do your homework before investing. Before investing, Buffett conducts an in-depth study of each of his firms to ensure his understanding. He makes large investments once he has determined that a stock is robust. He also favors businesses that are simple to manage. After all, businesses that are so simple that a fool can run them are generally safe investments, even when fools are in charge. Warren Buffett is open about how he conducts research before making investments. Trendy stocks like Facebook, Apple, Snapchat, and Twitter are constantly available for purchase. But Warren Buffett avoids them and instead invests in stocks with a track record of success. After all, it's impossible to predict where the most recent trends will go or how long popular investments will be profitable. Warren Buffett needed help comprehending why people will accept unfavorable positions to advance. He firmly believes you should pursue your passions since life is too short. Warren Buffett puts effort and works into his profession because he likes what he does and invests. He would likely care less about it, put far less effort into it, and he would undoubtedly not be satisfied if he did not like his job. He once said that saving up sex for old age is similar to taking a job you don't enjoy for the promise of future benefits. He once said that it is extremely poor life management to forego doing what we love in the name of greed. Buffett feels temperament, not intelligence, is the most crucial trait for a successful investor. Successful investors don't concentrate on following or defying trends. Stock market fluctuations are expected, but Buffett maintains his focus on his objectives through good times and bad, and so should all investors. Investing in oneself is arguably the most important lesson from Warren Buffett's life. He frequently brings it up, but even as a young man, he was aware of the importance of effective communication when persuading people to fund his ventures. He took public speaking classes to prepare for that. The benefits of taking care of yourself and improving yourself are constant, whether it is by learning a new skill, exercising, or simply getting enough sleep. Whatever the market does, Warren Buffett rarely modifies his long-term investing approach. By Benjamin Graham's book, The Intelligent Investor, Buffett was persuaded that purchasing a stock entails having a stake in the company. Graham is a British-born American investor, economist, professor, and investor, widely regarded as the father of value investing. As a result, Buffett looks for companies with promising long-term potential while looking for a company to buy. Does the business have a long history of operations? Has it established a successful company franchise? Does the company provide substantial and enduring profit margins? Buffett could want to buy the company's stock if its share price now sells below estimates for its projected future growth. Buffett will only purchase something if he can justify his decision to pay a given price per share for a particular firm in writing. All investors are urged to follow this advice. Buffett is a value investor who prefers to purchase top-notch stocks for incredibly low costs. His true objective is to increase Berkshire Hathaway's operating power by investing in stocks that will produce reliable returns and long-term capital growth. Buffett spent billions on companies like General Electric and Goldman Sachs during the financial crisis of 2007 to 2009, stockpiling excellent long-term investments. Investors must establish standards for identifying quality companies and maintain their discipline to make wise stock selections. For instance, look for businesses that provide a long-lasting good or service and have a strong operational profit and the potential for future profits. You could decide on a maximum debt load, a maximum price to earnings (PE) ratio, and a minimum market capitalization you're ready to accept. The ultimate objective is to find the appropriate business at the right price with a margin of safety against unknowable market risk. Remember that the value you receive from a stock is not the same as the price you pay. Successful investors are aware of the distinction. How long should a stock be held? According to Buffett, you should only own a stock for 10 minutes if you feel comfortable holding it for 10 years. Buffett steadfastly kept on to most of his portfolio, even during the era he referred to as the economic Pearl Harbor. A lengthy holding time will prevent an investor from acting overly human unless a company has experienced a fundamental shift in its prospects, such as unsolvable labor issues or product obsolescence. Investors who are extremely scared or overly greedy may sell equities at the bottom or acquire them at the top, destroying long-term portfolio growth. The quickest response is to invest in inexpensive stocks with promising long-term prospects. The broader answer is that until anything materially changes in the company's outlook, such as product obsolescence, it needs research and consistent dedication to the firms you're investing in, which means holding them through thick and thin. Keep in mind that he seeks stable businesses with strong balance sheets and promising long-term prospects, something he can retain for a considerable time. Buffett could blithely respond forever to that query, and he wouldn't be far off the mark. Buffett will preserve his portfolio even in times of high market volatility, and he might even increase it if the price of some of his holdings drops to a desirable level. Buffett, a long-term value investor, views market volatility as an opportunity to acquire at attractive levels or as a signal to take profits and sell some of his assets if it exceeds what he considers a fair price. Warren Buffett is undoubtedly the best investor alive. He has achieved this by adhering to fundamental guidelines while adding to and selling investments in his portfolio. Buffett is a value investor who hunts for stable businesses with promising futures at prices below fair value. Indeed, rather than being a collection of equities that Buffett actively buys and sells, his holdings should be seen as an investment portfolio. His strategy of selecting stocks entails extensive research to determine a fair price for a specific stock. He might consider purchasing a specific stock, but only at a price he finds acceptable. Buffett, therefore, sees chances as prices decline to his predetermined fair valuation, unlike the rest of the market, which may be, for example, in a panic selling mode. He likes stock XYZ, but not at the price it is trading at right now. He is prepared to acquire the stock if the markets cooperate and the price falls to his ideal price range. Buffett said that the market supports your investing plan, but only when the price is appropriate. That is all for this video. We will be back soon with another informative video. Don't forget to like and share this video. Until next time.